Hi, JJ here with The Art of Value. Welcome. Well, today I'm going to talk about Bruce Flatt, who's the CEO of Brookfield. He's also known as the Canadian Warren Buffett for various reasons, and he was involved in this panel in the Forbes Summit, the Iconoclast Summit, and he had a lot of insights on investing, his thoughts on the current situation. So we're going to get into that today, see what he said. In the panel discussion, they covered 6 questions and topics. The first one was what they think is overhyped right now. You might guess what that is. And also what they think is underappreciated right now. Number 3 was the outlook for the stock market in the current economic environment. And number 4 was investing in China. Number 5 was the transition to renewable energy, the energy transition, which Brookfield is heavily involved in. And number 6 was final thoughts on investing in the world economy. So a quick look at Brookfield, saying he's the CEO of Brookfield. If you look at this chart, which I'll put on the screen on video, we can see that it's had 1,891% growth since 1997. And it's now at 2,997 above its low, and it's actually below the high now of 33.6%. Some people say it's undervalued right now. Here we can see some of the investors that own it and have bought it recently. Mohnish Pabrai, it says it's 20%, more than 20% of his portfolio. It's not, because he is international, and this is just looking at his US shares, but he added to it recently. Josh Tarasoff owns it. Chuck Akra, really famous compounding investor over time. He's had several 100 baggers over time. Thomas Gaynor from Markel, that's often known as a baby Berkshire. I actually own shares in Markel. It's interesting to see that Thomas Gaynor, who invests for Markel and is the CEO, and Third Avenue Management owns it. Prem Watsa, another person who's been called at times a Canadian Warren Buffett. And just quickly, we can see some recent activity from those investors here. We see Mohnish Pabrai's bought it in the last quarter. Chuck Akra's bought more. Third Avenue Management has bought it. So these are well-known investors, just been buying it recently as this dip has been happening. And in Q4 2022, even Pabrai bought some more. Chuck Akra, Josh Tarasoff bought there. So they've been buying it over these last few quarters, so that indicates that they think it's a good buy over that time. First, the panel was asked what they think is overhyped right now, and of course he said AI. He thinks AI is overhyped, but he also said that anything that everybody's into gets overhyped. But his second answer really was that he thinks negativity is overhyped right now. He says when we hit the bottom of markets, then people get worried about various things, about recessions, about interest rates, of politics, or 15 other things. And so I think he's probably thinking that the bottom of the market has been reached by saying this. He says that negativity is overblown, and when we hit bottom of markets and we trail along, that's when people should be investing, but they stop investing. So they kind of stop investing at the time when they should be investing the most. So his general message there is stay positive and stay invested. So he's a long-term investor. He would always say stay invested. People trade in and out of the markets, but he's a very long-term investor. Thinks 20 years ahead, 10 to 20 years ahead, and he goes on to talk about that. Even though he says AI is overhyped right now, he does think it's important clearly, because in his final comments later on, he did say that AI and other technologies are important. They're helping raise people out of poverty generally in the world, and that's a really good thing. Being positive again, he's pretty positive and bullish in general. Even though AI is becoming overhyped already, I might point to my previous video about Stan Druckenmiller, who's invested in Nvidia still, and he was invested in the dot-com bubble, so it's kind of about lessons from the dot-com bubble, and he says he's going to stay invested in Nvidia for 2 to 3 years, he thinks. He says there's no reason why it couldn't go on, even though it's at nosebleed levels right now, and I'll put a link to in the description to that video and at the end if you're watching on YouTube. So it's interesting to see he's still invested in AI, but he's a different kind of investor. He invests on the macro, and Bruce is the CEO of Brookfield, which is completely a different kind of investment. Next, the panel was asked what they think is the most underappreciated right now, and Bruce said that he thinks that long-term compounding, the effect of long-term compounding of wealth, is most underappreciated, and it usually is. And when he says he's being positive, he's talking about the next 20 years, not the next few years or few months or even 5 years. He's talking about compounding wealth over 20 years. He says buy things with great people and great companies, and this is very reminiscent of Warren Buffett and Charlie Munger, which is probably one of the reasons why he's called the Canadian Warren Buffett. Very similar in some ways, and the company, the way he's dealing with Brookfield, is similar to Berkshire in a way too. It seems simple, and it's similar to what Warren Buffett says. He says that great wealth is created by compounding markets. The markets will compound, and staying in those markets and investing over the long term creates compounded wealth. And then he was asked about Brookfield's compounding, and he said that they've been compounding for 25 years and they've got nearly 20% compound annual growth rate over that time. And he added that if you go north of 12% annual compounding, the compounding that happens, the wealth compounding, is really incredible. The greatest miracle of finance, he said. He said you can make big mistakes by investing with the wrong people. And he also says a good time to invest is here. When the market's going like that, invest on the way down is the best time to invest. Because if you invest on the way up, you can miss it. So it feels bad. He said it feels bad to invest there if it's still going down, but it turns out to be the best place to invest on that down curve before it curves back up, because you're catching that whole upward momentum when it does turn up. By the way, if you're getting value out of this episode so far and you're watching on YouTube, I really appreciate you hitting that like button to help spread it to more people, help with visibility. Also, we're well over 1,000 subscribers and followers across YouTube and Spotify, those two main video podcasting platforms. So if you're not subscribed yet, maybe think about subscribing to get more of this kind of content. Later on, one of the other panelists is pretty bearish, pretty pessimistic, and he again says that this always happens when the market bottoms and we're turning, and that's what he says. He thinks the market's bottoming and we're turning up, and he says people are way too negative when this happens, when they should be positive in investing. He reiterates that. He says this a number of times, which is interesting. You don't see that many investors talking about they think that the market is bottoming now. People don't really come out and say that. They don't know, but he seems pretty sure about that, which is fascinating. Then he talks about the distraction of the stock market. He talks about one of the reasons that more investing is going private, and they do a lot of private investing, could say Buffett does a lot of private investing, is the distraction of the market. He says even he is one of the long-term investors, one of the longest-term investors that you'd find anywhere, and he gets distracted by the market, the ups and downs of the market, the noise, the news, and so that's one of the reasons that the more investing is private, because you don't really deal with that. Next, they were asked if they thought that people should be invested in China, about what's happening there. Should people be invested? And he said Brookfield is invested in China. They've been invested there for a long time, but they also invested in about 30 countries around the world. And he says one of the differences with them, with Brookfield, is that they can choose whose money to take, and that makes a difference in China. And they were joking about how US investors are the least likely to invest in China right now. People are fearful of China and put off by what's going on there from what's happened in the last few years and this rivalry between US and China. They didn't talk about that, but I think that's a big factor. I've seen a lot of US investors not very interested because they don't trust what's going on in China. They've been really put off it, and there's this sort of conflict that could escalate over time, but some people are okay with it. Charlie Munger's okay with it. He has said that civilized nations should be able to get along, and there's this possible tension with Taiwan, and they bought Taiwan Semiconductor and then sold a few months later, which is very unusual for them because Buffett said that the location was bad. He was obviously thinking about this potential conflict, so he pulled out after making a huge investment in Taiwan Semiconductor because of the location. And I think a lot of people think that way about investing in China, but Brookfield is invested in China and they'll continue to do so long term, of course. He said out of their investors, Middle Eastern investors are very interested in investing in China, and so are Asian investors and obviously Chinese investors. So US investors, not so much, but there are investors from other parts of the world who are keen on investing in China still. He said the money they're bringing to China to invest is from different people, and obviously US investors becoming less interested in the last 5 years, but he did say that they've been doing really well in China. They've made a lot of money there over many years. Next, they moved on to the energy transition, and Bruce said that one of the biggest areas for investment capital to go over the next 25 years is into renewable energy, and they're very involved with that. The way that he sees it is that we need less carbon in the system. So the way that they're approaching it is not to say black energy or green energy. They're saying that they're just going to be funding less carbon over time. So as an example, he says they're in the midst of buying a utility company, and it's completely 100% coal and gas at the moment. But he said over the next 10 years, they'll spend $25 billion transitioning it to battery, wind, and solar. So it's this funding less carbon, funding more renewables over time, literally an energy transition to renewables. He was asked if the Inflation Reduction Act in the US is helping with projects, and he said, well, what it's doing is helping get there faster. So if you have a big project, it's doubling the size of it, letting it happen faster, so it's getting to that endpoint faster, so it is a help in the US. In his final thoughts, he reiterates that he's fundamentally a bull, and after 35 years of doing this, he found that's a healthy way to be. One thing he does say about being bullish is that you still have to be careful that you don't get called out in the middle of compounding. If you make a big mistake and the markets don't go your way and you're in a position where you get caught out big time, you're done. The compounding will get interrupted, so you have to really be careful of that, even though he's long-term bullish. So he says you need to be fiscally prudent, and he also says, in summing up, that he goes back to this thing about AI and other technology, saying it's raising up populations out of poverty year by year, and also education is helping. So he says it's dispersing wealth to those people who haven't previously had it. I mean, that's arguable whether that's happening or whether it's going to a certain few number of people, but that's what he said about it, that he says generally technology is helping to eliminate poverty and raising populations up out of poverty. I want to know your comments. What do you think about what Bruce said about the bottoming of the markets? Do you think that the markets are bottomed and that we're on the way up now? He seems to think so. Also, do you think AI is overhyped? Do you think it's already too expensive to buy? What do you think about that? Earlier on, I mentioned the previous episode about Stanley Druckenmiller, his thoughts on AI. He's invested in AI, his thoughts on the economy, his predictions. It's interesting to contrast that with what Bruce Flatt has said. So I'm going to put that episode up here. If you're on YouTube, click there, or I'm going to put in the description for those watching or listening elsewhere. Also, if you got value out of this episode and you're not subscribed already, consider subscribing and joining the over 1,000 people on YouTube and Spotify video who are already subscribed. And thanks for watching or listening this time, and I'll see you next time.